Hi, I'm Patukura Free FinCal. On today's video, let's take a look at HDFC Equity Fund. This is one of the oldest funds in India. It has been managed by Prashant Jain since 2003, and it has got an AUM of more than 21,000 crores. But it can be a frustrating fund to hold for investors, but let's find out how good the fund has performed. So the fund has a colorful history. It started out as Centurion Quantum Fund. Centurion AMC was the one who started the fund. Then Centurion sold it to Zurich in 1999. Then the fund became Zurich India Equity Fund, and then HDFC finally acquired it in 2003, and it became HDFC Equity Fund. Prashant Jain has been part of this full journey, but he was not fund manager of this particular fund, but he only took over after the HDFC acquisition in June 2003, and he has been managing this fund. HDFC Prudence he has been managing since inception, and that's a record for India. So this is a quote that he gave in LiveMint, an article in the LiveMint, and this is quite amusing to read. Way back in 1991, when I started my career, there were no screen-based trading. There were no mobile phones. While traveling, we would stop at a public call booth to check on the markets. Research from brokerages were less, and information gathering itself was a major activity. I remember we had tied up with a few scrap paper dealers to sell annual reports to us by the kilo. No company visited us in our office except at the time of public issues. There was no investor relations role in companies. There were no star ratings done on mutual funds. Airfares were less affordable, and we were advised to keep travel to a minimum, unlike today where people have to be prodded to travel more. So, it's very interesting how times have changed, but he seemed to think nothing has changed for him in terms of managing the fund. He strongly believes um, the there are no large funds in India, and AUM is not a problem for fund management. But that's what he says. And of course, he also has skin in the game. But unfortunately, he has got crores to spare considering his salary. But we don't have that kind of money, so we have to worry about our money. So, before 2030, before the SEBI regulations kicked in, before May 2018, it was just called an open-ended growth fund with an objective to grow wealth. Since then, it has been labeled as an open-ended equity scheme that can invest across large cap, mid cap, and small cap stocks. They have the AMC has a detailed presentation on how the fund has done well across market cycles, how the fund has picked themes correctly over time, and so on. And they have a screenshot that shows the large cap exposure. This is the top one you see is the large cap exposure. The rest is the mid and the small cap exposure. You can see that the fund has predominantly been large cap. It was just during 2009 and 10. It had a good amount of mid caps, but then during this time the AUM also grew rapidly for this fund, and since then it has been primarily a large cap fund. Even today, by the large cap definition, this fund will be called as large cap, because for large caps it has to have about 80% of large caps. The rest of it is mid small cap. So even by that definition, this fund is a large cap, but this fund has done well in the last couple of years or so. Has the fund's fortunes turned around? Is something that a question that nobody can answer. At the same time, nobody can discount Prashant Jain, because when Prashant Jain was started, his fortune would be in diapers. Some may not have been, not even been born. So I mean, he's not somebody you can say his time is over. His tenure as fund manager is over, and so on. You can never discount him. He's a very, very, very shrewd guy. But still, you can't wait forever for him to perform. So if you look at every possible 3-year returns compared with the Nifty 500, the pink line is the Nifty 500 and the yellow line is the HDFC fund. Notice that the fund has not done exceedingly well over 3-year periods, even when the AUM was low. Even during this period prior to the 2008 crash, and since 2013 and so on, the fund has barely been able to beat the Nifty 500, or sometimes it has not. So over 3 years, it just won't work for you. I mean, you'd be frustrated. Even over 5 years, up to 2015 or so, the fund was able to beat the index, its benchmark over 5 years. But since for the last 4 years or so, it has not been able to do so, and the outperformance margin has come down considerably. It has been just about barely able to beat it, just keep its nose up. So it's a bit of a problem. But um, above 3 years, definitely the performance is much better, I would say. Again, 7 years, last couple of years for 7 year durations has been bad, but before that, the outperformance was significant. 10 years it has done well. It has a good record. And there's one more 15 years. I don't know if I have that data. These are 5 year SIP data points. Every data point is a 5 year SIP return. There are 222 blue data points. Each one is a 5 year SIP return. I have a rolling SIP return calculator. You can see that again, it can be frustrating in terms of beating the benchmark. It doesn't do it regularly enough over 5 year SIP periods as well. So this is it's a good fund. If you are really patient, if you have a very long-term need, and if you believe in Prashant Jain, then this fund will work for you. The only problem with this fund is that it's got huge expense ratio, and this has got the highest direct AUM. In terms of the actual direct AUM, this has got the highest fund. This is the most popular direct plan fund. This data is not available on Value Research and anything. You have to go to AMFI to get this data. I did and published a study, and I found that this fund has got the highest direct AUM, but still the the total expense ratio is extremely high for the kind of AUM, for the kind of funds that the fund manager is managing. Therefore, I believe the performance should be a lot better over the short term, over 3 to 5 year period. That has not been the case. So it can be a very frustrating fund. Existing investors, they are happy with the performance, they can continue to hold it, but for new investors, it can be a problem. I mean, the many new investors are impatient, so it can test your patience. And of course, can you handle poor performance for your personal goal, for your need, and so on. So it is a good fund, but it needs time to deliver. But can you afford the time is the question that you need to ask. So that's what I wanted to say, and I'll catch you again in another video. Thank you for watching. Bye bye.